Hey everybody, Jason and John here with Everyday Crypto, sponsored by CryptoTaxShield.com. Jason, thanks. It's been a few days, but I appreciate you taking some time.
John, thanks for having me. As always, I appreciate it.
You bet. So I got a couple things I want to go over today. I got a few notes here, and we're going to start with something that's very sort of timely because it happened today. Let's talk about the Fed going sort of bonkers today. With their newest rate increase, and let's just kind of start there. I want to pick your brain on that.
Yeah, great. If I could, please, if you find any educational or entertainment value in this all, please like and subscribe. It helps us help you. And believe it or not, we are not financial advisors. Do your own research.
Absolutely.
So prior to today, I'll say prior to yesterday, really, everyone was super convinced that the Feds were going to increase rates by 50 basis points, which is 0.5%.
Right. And
yesterday, you started hearing rumors of them going to 75 basis points, 0.75%. And the reason why that rumor started is because the last week's CPI, Consumer Price Index, came out, and it came out much higher than the Feds would like to have seen it.
Right.
And then today, the Feds did come out at 2:30 and say that they are going to increase rates at 75 basis points. And they said something that most people probably didn't listen into. Like most people, there's a whole hour-long speech with this thing. And Powell said that we don't anticipate this being the norm, which that was, to me, the real talking point.
Right.
That means that he thinks this is like the outlier. 75 basis points is a lot. Like historically, that's a big hike in interest rates in an attempt to decrease inflation.
Sure.
Prior to this, it's been 50 basis points.
Right.
But me, I focused in on the fact of what he had said, because that lets me know that he sees things that could be looking better down the road.
Yeah. So let me not to cut you off, but I want to backtrack on something. You mentioned CPI. For those who aren't familiar with that, can you sort of break down what that is and why it matters?
Yeah, CPI is the Consumer Price Index. So the Federal Reserve puts together these random numbers to get what they want as a reflection of true interest rate or inflation.
Okay.
But what CPI is, it's a much more realistic number because it's like a consumer bag of goods.
Okay.
Things that they assume most households need, like toilet paper or eggs, whatever, like things most households need.
Sure.
And so it's a basket of goods. And that came in higher than they wanted it to. So the Feds probably saw that and said, okay, interest rates need to be higher than 50 basis points.
Okay. Gotcha.
What they're trying to do is this inflation is this, thing. And what they're trying to do is they're trying to hit a curve so it can start going downward. Mm-hmm. Once they see that curve happening, you'll see the Feds take their feet off the pedal and let this thing kind of correct down the downward slope.
Sure.
The Fed does not want to be responsible for crashing this market.
Right.
Like they are really. The Feds people give the Feds a lot of trouble with most people don't like the Fed.
Sure.
I would not want their job.
Right.
So inflation's out of control. So if you let that continue out of control, you end up being like Sri Lanka or Greece. Like you end up going bankrupt.
Right.
And the people can buy less with the dollar. So you have to but in order to slow down inflation, you've got to mess with the idea of unemployment. Right? Because you start increasing interest rates. Mm-hmm. Stocks go down, crypto goes down. Major corporations don't borrow money because it's much more expensive to do so.
Sure.
And therefore, there's a tightening of the economy.
Gotcha.
So it is a fine line they walk. It really is.
Yeah, yeah. I mean, it's not a job I'd want either, but it really becomes damned if you do, damned if you don't, right? Like what pain do you want to feel? So as opposed to sort of finding a solution. Let me shift gears just a little bit. First of all, thank you for that. That's awesome. Shift gears a little bit. What's going on with Celsius?
Yeah, so a few days ago, rumors of Celsius started coming out that they were possibly insolvent. which means they're bankrupt.
Right.
For those of you who don't know, Celsius is like a Coinbase. It's an exchange where crypto activity happens. But they provided another service where if you deposited or staked your crypto on their website, they would give you a certain percentage rate back. But how they created that interest rate, or that the money they gave you, is they would take your funds and stake them other places that gave a higher interest rate.
Gotcha.
And they were heavily staked into this thing called the SETH pool.
Okay.
I won't get into that because it's a derivative of Ethereum.
Okay.
And there was a blatant attack, much like on Terra Luna, on that pool, with I imagine to attack Celsius. It's because Celsius had the biggest part of that pool,
right?
And so Celsius has freezed withdrawals and trading activity on their website for now, which, if you know anything about crypto history, that's the big fear. That's why we preach do not keep your coins on exchanges, because if you read the that agreement statement before you sign up for anything, well, Coinbase, Robinhood, they're all the same. If you read them, you don't actually own those assets till you take those assets.
Right.
So if you buy a bunch of stock on Robinhood and they go insolvent or bankrupt, those were never your assets. They can use those assets to liquidate their situation.
Sure.
And that's where Celsius is now. So I don't want to paint a dark picture, but I'm sure this all started with Terra Luna.
Yeah.
You remember, your average retail investor wasn't involved in Terra Luna. It was the super knowledgeable whales. Those are the ones who really got involved in Terra Luna. And much of these monster institutions like Celsius, they are highly leveraged.
Yeah.
And we've preached on this show how dangerous leverage is. Well, this is the reason why.
Right.
If you're leveraged and the stock and your assets go down in value dramatically, or if there's a liquidation event caused by Terra Luna, the dominoes start falling. And if you're leveraged, you're the domino.
Right.
So there's a lot of fear of that. I hope it's not true. I hope they stay solvent. I think it'll be a really bad look for crypto in general if they go insolvent, because that's probably billions of dollars wiped off the. It's anybody who had money on there would probably lose it.
Right. So we'll have to keep maybe on a future episode we'll do a double back around to kind of see where they're at. I'm sure it's in flux right now. Overall, though, sort of a last question for this episode. How are you feeling in terms of crypto right now? Are you feeling bullish? You feeling bearish? Running for the hills, hiding under the bed? What are you doing?
It's so crazy, John. Like, I literally am studying all of the markets right now, 12 hours a day. That's all I'm really doing. I'm not investing because really everything's risk off right now. But depending on what time of day you ask me, the answer tends to change. So I can paint two pictures right now, right? So these liquidation events, they're not crypto specific. You're going to see this in the stock market. I guarantee there are companies right now sweating bullets knowing they're about to get liquidated.
Right.
It's not that they're leveraged too. Like, everyone's leveraged in these markets. If you were to see a cascade of massive leverage events that kind of hit one another, that's super bearish. Although it's oftentimes a sign of the end. Usually, you've hit the bottom of the bear market when some major U.S. corporation goes bankrupt.
Right.
For some reason, that's just like the bottom of it. So I'll paint a picture, but one of those ways. So I'm keeping an eye on the China market.
Yeah.
Because I believe personally that a big part of our inflation is due to supply chain issues.
Sure.
And China is one half of our supply chain issues, the other half being the war in Russia. Well, a few days ago, China's numbers came in and their productivity has gone up dramatically. And they seem to have taken a different route with dealing with COVID. So if we can just get them back on track over the next couple months, I believe you'll see inflation numbers go down dramatically. And that would then lead the Federal Reserve to stop increasing interest rates, which would then let all the money on the sidelines know, hey, look, it's go time. These things are taking off That's the positive. I could see this turning around the next couple months. I really could.
Sure.
That's totally possible. On the other side, we've had 2 black swan events. We've had the perfect storm for a bear market.
Right.
I think things are oversold and beat up. But with that being said, like if you see 2 or 3 more liquidation events on major institutions, like for example, let's just say, I'm not saying this is possible. I do not know.
Yeah.
Let's just say Coinbase goes bankrupt.
Sure.
That would be devastating.
Sure.
Like that would really be devastating. So I'll be honest with you, today after watching the Feds, I lean more bearish, although conservative. I'm not investing, but I am watching.
Right.
But with that being said, you asked me tomorrow morning, I'd be like, oh my God, the world's ending.
Yeah, but you know what? That builds a little bit of excitement too, though, right? You know, it's you don't always want to know what's around the corner because there's no surprise, it can get exciting that way.
Yeah.
No, this is good stuff, man. No, I really appreciate you taking some time. We covered a lot in 10, 15 minutes. We covered a lot of stuff. So,
if I could say one thing, just
of course,
I can say this with sincerity because I can feel it. Right. Mm-hmm. It's hard for me to want to watch these markets. Like it's natural instinct for me to just be like, hey, I'm gonna go do something else for the next 2 months.
Sure.
But I take the responsibility to say to myself, I want to educate myself. It's easy to be a genius in a bull market.
Right.
But in the bear market, you find out who's really around, like who's still studying these markets, who's trying to educate themselves on this situation, because maybe this is a situation a lot of investors have not seen before. Right. This is a very unique situation. So if you can just keep an eye on the market, keep watching videos, just keep educating yourself. When the bull market does show up again, you'll be better prepared. And
it will show up again. So,
for sure.
I mean, that's the cycle of life. So
yeah,
just be prepared. No, that's sage advice, man. No, I really appreciate you taking some time. We'll do another one soon, and more nuggets of goodness. So,
all right, John, I appreciate it. Thank you.
Thanks, Jason. Take care.
You got it.